Seller paid closing costs. That is when the seller credits the buyer a certain dollar figure at closing that the buyer can then use to pay their closing costs. Now you might ask, why not just reduce the purchase price? Isn't that simpler if the seller's gonna give away money? Well, the thing though is that when we can use those funds for the buyer to use in different ways, it's going to make a much bigger difference to the buyer's financing than simply reducing the purchase price. Within that, there are maximums that the seller can contribute. So I'm going to dive into those real quick. The maximum that a seller can contribute towards a buyer's closing costs is going to be dependent on three pieces of information. One is the loan type. What kind of loan is the buyer getting? The occupancy type. Is the buyer going to live there, use it as a vacation home or an investment property? And then also the down payment percentage. So based on these three factors, there are different maximum allowables. So for example, let's say we have a purchase price of $1 million. Nice round number. So we've got a purchase price or a sale price of $1 million, and we've got a conventional loan that's owner occupied with 20% down. In that case, the maximum that the seller can contribute to the buyer is 6%. So that's $60,000. Now you're probably not going to have $60,000, so it's really important to find out what your real closing costs are going to be and make sure that you don't ask for more than you really have, because a seller cannot ever contribute to the down payment. So you got to have enough closing costs for the seller to cover. So don't negotiate more than costs that you have. Okay. Second example, just to throw a couple out there. Second example is you could have a conventional loan with 20% down, so same as before, but now it's an investment property. Now the maximum is $20,000. So that would be the maximum allowable is 2%, so $20,000. That's always going to be a percentage of the purchase price. Okay. Or just to throw out a third example, you might have owner-occupied conventional loan, but with 5% down. Now the maximum is going to be 3% or $30,000. So just know that you got to check the guidelines before you do any negotiating on this. Now you might be wondering, well, what can we use these for? Because 20, 30, 60, these are big numbers. You can use seller paid closing costs to reduce the interest rate on the loan pretty darn drastically, temporarily. So for the first couple years, we can use those seller paid closing costs to do a temporary buy down, reducing the rate by 1 to maybe even 3% from the start rate. Another way to use the seller paid closing costs is to buy the rate down permanently. It's going to be less drastic of a dip, but then stay the same for the life of the loan. A third option would be to buy out the mortgage insurance instead of paying it monthly if you have a loan with mortgage insurance. You can also use it to prepay HOA dues on a condo or potentially get a home warranty for the house, right? There are many ways to use seller paid closing costs that can really benefit the buyer much more than simply dropping the purchase price. I hope that helps. Talk it out with your realtor, talk it out with your loan officer. There are lots of fun tricks in there, tips and tricks.